In America, the onset of a serious illness is a dual-front crisis. While your body enters a biological emergency, your finances face a simultaneous catastrophic liability that can mirror a total market collapse. Despite these stakes, most people approach their physical well-being like a lottery. They simply hope they won't draw a bad ticket, leaving their most valuable asset entirely unmanaged. Professional financial institutions never rely on hope. They manage billions of dollars through a rigorous mathematical framework designed to isolate and neutralize threats: risk management. By applying this same Wall Street logic to our own bodies, we can utilize 5 specific strategies to structurally hack the healthcare system. Adopting this 5-tier defense provides the foundational security required to protect your personal bank account from total, permanent ruin. The first and most effective layer of defense is avoidance. In risk management, this means identifying a hazard and completely refusing to participate in the activity that creates it. Smoking cigarettes is the definitive example of an avoidable biological hazard. It remains the leading cause of preventable death in the U.S., claiming nearly 500,000 lives every year. Under the Affordable Care Act, the financial penalty for this risk is codified into law. Insurers are permitted to levy a surcharge of up to 50% on premiums for smokers, compared to non-smokers. Since life eventually presents unavoidable risks, we deploy a second layer: loss prevention. Here, the goal is to detect a breach in your biological defenses early enough to contain the damage. This is why health plans frequently offer preventative care visits without a copay. Insurers understand that an annual physical or an early screening is a fraction of the cost of treating an advanced, unmanaged illness. Insurers extend this loss prevention by subsidizing gym memberships and health clubs. They are paying to keep you active today to reduce the probability of a massive payout tomorrow. Avoidance and loss prevention are the only strategies in this sequence that physically protect your body before a medical crisis begins. When a major medical event inevitably breaches your preventative efforts, the strategy must shift toward financial mitigation. At this stage, you need to transfer the risk. Transferring risk is the core function of insurance. In exchange for a monthly premium, the insurer signs a contract to legally assume the financial burden of your healthcare costs. However, the cost of transferring that risk as an individual is often prohibitive, which brings us to the 4th layer: sharing. Employer-based benefits utilize this method by pooling the risk across a company's entire workforce. The massive cost of the insurance premium is distributed across the employer and every participating employee. This larger pool provides stability. With more participants sharing the potential loss, the individual cost of those premiums shrinks for everyone involved. The final layer of the defense matrix is retention. You must acknowledge that it is impossible to outsource 100% of your risk. Retention is the strategic acceptance of a calculated loss. This often takes the form of selecting a high-deductible health plan, where you accept the risk of higher out-of-pocket costs in exchange for lower monthly payments. Transferring, sharing, and retention create the structural safety net that prevents medical bankruptcy when your physical body fails. By layering avoidance, prevention, transferring, sharing, and retention, you create an interlocking fortress that mitigates the risks that can never be fully eliminated. This methodology aligns the interests of the patient with the mechanics of the healthcare industry, turning personal health maintenance into a mutual financial win. Health insurance companies prioritize these strategies because healthy clients are less expensive to cover, allowing the providers to preserve their own bottom line. For the individual, the dividend of this system is threefold: lower monthly premiums, fewer out-of-pocket medical expenses, and a statistically longer life. By applying these 5 risk management methods, you move from being a passenger in the healthcare system to the CEO of your own biological and financial survival.